Stocks trade ranged amid few global cues, though rising COVID cases in China are a bother. Realty and industrials see green, while IT and FMCG flash red. Mid-caps outperform.
Axis Bank tells investors its digital platform is boosting growth powered by online partnerships. Even as credit quality improves, analysts give a thumbs up to the stock.
Punjab National Bank or PNB gains on receiving a nod to divest its over 15% stake in UTI AMC, while the valuation of Ashok Hotels is at 7,400 crores, boosting the parent Indian Tourism Development Corporation.
The high-level committee on private equity and venture investments is looking to make rules friendlier to draw more investments. Panel chief M. Damodaran tells CNBC-TV18. The panel expects to complete its report by December 9th.
Hello and welcome. You're watching us here on Halftime Report. I'm Mangla Malu. With me as always, Ekta Batra as well as Sonal. It's the start of a new series. The November series was a great one. The December series promises to be a good one. At least that's what the FIIs are positioning themselves for, 77% long exposure. Let's see where we go from here. So far, we are dwindling between red and green, just around that 18,450 mark on the lower end to about 18,500 at the upper end. Let's see where we go. This morning, there was a record high move on the Nifty Bank and understandably some profits being taken home as we move towards the end of the week.
Hey Ekta, hey Manglam. Of course, we are seeing a lot of moves in individual stocks. Nifty Bank, which of course is in focus because it is at the day's low. We'll discuss that in greater details, talk about banking stocks as well. But first day turning out to be quite flattish today, Ekta.
Yes, absolutely. But, you know, there is consolidation after that strong session that we saw in yesterday's trading session. So really no complaints coming in. The momentum largely is intact, considering that we do have the Fed minutes, which really enthuse the markets. And in fact, we saw FIIs turn buyers after 4 consecutive sessions of a sell. It was the largest FII buy figure from the 14th of November. But I really wouldn't put, too much credence in it. I would want to see what happens once the US markets come back into full play and what takes place in terms of flows post that. All eyes, and Manglam, I think, mentioned this a few days ago, would be on the Black Friday sales from the US. And, you know, interestingly, we've seen Black Friday sales come up in India as well. Yeah. So it is definitely a momentum or a type of theme which is starting, or a trend which is starting.
It's not only Black Friday. In fact, people are actually asking if there's Thanksgiving holiday in school. So I think we're taking as much as we can of the US.
If you want to talk about that, you can talk about all the crazy Halloween parties.
Exactly, that's what I was going to say. Yeah, anything that happens, Halloween and all of that stuff, they're celebrating it. So it's understandable that they only ask for, Thanksgiving holidays as well, because all the schools are IB these days. So, you know, they are taught all those things. But move on. Let's talk about the first corporate that we have lined up for you. Ganesha Ecosphere posted a good set of second quarter numbers, but in the last 1 month itself, the stock has actually gained 16%. This is obviously a PET bottle recycling company. They have a new plant coming up as well. So what's going on in the business? We do have with us the management. Gopal Agarwal, who's the CFO of the company, joins in. So the last 1 month, 15%. And this at a time, remember, when the mid-cap index was actually underperforming. Gopal, thank you for joining in. You know, the Warangal facility that you are expecting, which will be commissioned in the second half of this fiscal, just wanted to understand, how much will that add in terms of your overall revenue? What kind of utilization are you expecting in this year? And at optimum utilization, what could that mean?
Yeah, thank you. Our Warangal facilities, we are making the new products, which are value-added products. In fact, the government of India has recently come out with the regulations for utilizing the 30% of the recycled content in the rigid plastics packaging. So it is an opportunity for the industry as well as for the company also. And we are in the leading company in recycling plastic PET bottles. So we have shouldered responsibility, and we are coming out with the bottle-to-bottle products in our Warangal facilities, which would be, we are in the trial phase, and we expect it will be operational by Q4. So the full impact, optimum capacity utilization would be in FY 23-24.
Okay. Mr. Agarwal, hi, welcome to the show. You know, I was more interested in knowing about this approval from the European authorities as well as the US authorities for food-grade B2B chips. Can you just tell us what the approval is for? What does it mean for business for you?
Basically, this bottle-to-bottle resin is used for the packaging of the food, and it is the indirect contact of foods. So therefore, there is a requirement to have the quality which can be suitable for the packaging of food. Therefore, there is a certain regulations in Europe. It is the EFSA, and in Europe and in US it is US FDA. So for selling the B2B products, the recycler need to secure the permissions from the EFSA and the US FDA both. As well as there is a local permissions also, like in India, it is a FSSAI, Food Safety and Security Standards approval.
I understand that, but I'm trying to assess the opportunity. The EFSA, for those who don't know it, is the European Food Safety Authority, which is in fact headquartered in Italy. Mr. Agarwal, I understand you've got these approvals. What does it mean for business? How much do you get in terms of sales from the US as well as Europe right now? And with this particular approval, what do you expect in terms of incremental sales?
We got this positive opinion of EFSA. It means we can sell our products in Europe, and with US FDA, we can sell our products in US also, because our regulations are coming in India with effect from 1st of April 2025. So before that, we will be able to sell our products in Europe and US market.
Okay. Mr. Agarwal, so it is a part of your South India Warangal plant only. You've got approval for 3 things: bottle-to-bottle, B2B chips, and filament yarn as well. As Manglam asked you, what kind of revenues will you see at peak utilizations? Of course, that will come in FY 24-25, but at peak, what will it do to your revenues? And since you say these are value-added products, will it change the margin profile for you? What kind of margins do these new products come at?
We are expecting optimum revenue of 600 crore plus revenue from our Warangal facilities. And of course, being the value-added products, we are looking for the better margins than our existing facilities. We are expecting to double our margins in new facilities.
Okay. All right. So what kind of capex are you putting into this capacity? Have you funded it completely? Will you be taking some debt?
Yeah, we have spent more than 400 crore on this facility, and we have also taken the debt of the 275 crore. And almost all the capex has been completed by now.
Right. Let's move on and talk about the market for recycled PET bottles. I mean, how big is this opportunity likely to be in India? I realize that brand owners are now obligated by, guidelines for use of 30% recycled PET packaging. This comes in only from FY 26. Just wanted to understand how big this opportunity could be, and what could players like you garner from this?
From 26 onwards, they have to use 30% of the recycled content. So presently the market size is more than 1 million ton of the virgin PET. So if you take the 30% consumption, so the total market size would be roughly 300,000 ton in 25-26. And this 30% content would go up to 60% till 28. So the market size would be more than 1 million ton, taking the CAGR growth of the PET industry.
Okay. All right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So it's been quite an outperformer, this particular company. It's gained over 75 to 80% in the past 1 year itself. For the markets, extremely quiet. It's only the mid-caps which is managing to hold its head above the water, up around 0.8% currently for the mid-cap index. Bank Nifty just about consolidating after the strong run that we've seen for that particular index. Well, we need to take a short break, but a quick programming note. In just a few hours from now, CNBC-TV18 is all set to lead charge with a one-of-the-kind mega initiative, Future Female Forward. The Women's Collective, presented by HSBC. Catch the on-ground event in the presence of Shireen Ban, Managing Editor, CNBC-TV18, Hitendra Dave of HSBC, and other women leaders of India Inc. Live this evening, 5:30 p.m. onwards. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces. Don't forget to tune in to CNBC TV18 today, 5:30 p.m. onwards.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18, and mid-caps, they are doing really well today. 0.8% higher on that one. Advance decline ratio in favor of advances at 2:1. So a lot of broader market movers that we are going to be discussing now. And the first one, of course, is PNB and ITDC. Both of them are surging in trade today. Vaishta is joining us to get us all these details. Vaishta, what's happening here?
Well, Sonal, in Punjab National Bank, the bank has received an approval of DIPAM for the divestment of stake in UTI Asset Management Company, and this is for approximately 1,300 crores. PNB currently holds 15.2% stake in UTI AMC, and the objective is to realize a gain on their investments. Moving on to Indian Tourism Development Corporation, the government has fixed 7,400 crores as the indicative value for the Ashoka Hotel. The Ashok is among the 8 ITDC assets which is listed under the National Monetization Pipeline, which was announced by the Finance Minister last year. The Ashok Hotel's monetization will take place through the public-private partnership mode. Back to you.
Okay. All right, Vaishna, thanks very much for that. So those are a couple of broader market stocks which are buzzing. It is Friday, so it's a great time to get an update with regards to what's taking place in the box office. Now, PVR and Inox, both are buzzing in trade today. Well, we do have, the box office collections. Drishyam 2, for example, is enjoying a good response, while there are a couple of other big releases today and over the next couple of weeks as well. Vaishta is here, back with us with the details on this.
That's right, Ekta. It is a Friday and we are again talking back about movies. The dry run for the movie exhibition business does seem to come to an end now. Drishyam 2, a legacy movie which was released over the past weekend, had managed to clock 64 crores in its opening weekend and has already crossed the 100 crore mark in its lifetime collections till date. So hopes are now pinned for a better Q3 after the Hindi box office's slow performance in Q2 of FY23. The lifetime collections for the movies that were released in Q3 till date are at 481 crores, which is to be compared with 812 crores in Q2 of FY23. Remember, we are not doing a year-on-year comparison because there were COVID-led restrictions in the last year, and hence the footfalls were, of course, lower. Also, there are emerging trends in the Hindi content with a decent pipeline for the remaining part of Q3 of FY23. Today we have a big movie release, Varun Dhawan starrer Bhedia, and there are decent pre-bookings in the theatres already. For the remaining part of Q3, there are movies like Ranveer Singh starrer Circus, there's Avatar, and there's a regional movie which is called Kushi. So such movie lineups do bring some great hope for the Hindi movie industry to move out of turbulent times after a string of failures in the recent months. Back to you.
Okay, interesting lineup there. Any of you who's up for a movie this weekend? Any plans?
Well, not for me in terms of a movie. I was just reading Avatar 2 is probably going to open with $150 to $175 million in terms of an opening. So it's probably going to be a huge debut. I'm sure you'll have seen the first one.
Yeah.
So the second one is going to be highly awaited. And I think it's all about the water, right?
Yeah, it is all about water. The only movie that I'm looking forward to this weekend, if at all I will watch, is Kantara, which I am told is now
You've still not watched it?
No, I haven't watched it in the theatres,
Yeah.
but I am told that it is on the OTT apps, so now I'll watch it.
Okay, so that's, I don't know what to say about PVR and Inox in that case, but the other stock on our radar is Paytm, surging in trade today on the back of a Citi note. Mangam, tell us more details on this one.
Well, it's a bold note to start with coming in from Citi after a 75% decline that we've seen in the stock from its listing levels, which anyway were at a discount to its issue price. So from its issue price down 80% and Citi believes that they should see some sort of support at these valuations. They have a buy call and they believe that the upside in the stock could be all the way up to 1,055 odd rupees as well. The reason why they say that is because the latest data that came in from Prosus, which also spoke about Zomato gaining more market share versus Swiggy, has said that Paytm has gained market share in digital payments versus PayU. The company is now trading at 5 times after the decline, 5 times FY24 EV to contribution profits. And while they do acknowledge the overhang risks coming in from further selling by existing pre-IPO investors, something that we've seen in a lot of these new age companies, they believe that at these valuations, the risks are overdone. Well, the only thing that I believe that the street will be watching out for in Paytm is the path to profitability, and when they actually report net profits, notwithstanding the fact that they're ahead of their own guidance on the EBITDA front as well. The stock's doing well today, but remember, it's seen a big decline.
Absolutely. I'm just going to put a number to that big decline. It's down over 60% on a year-to-date basis. So yes, there is some reprieve, but is it enough? for Paytm to get back its mojo at least.
As we speak about Paytm, there is a flash coming in on Nykaa saying that Pink Friday sale has delivered 75% growth. Over 400 orders every minute on day one. But day one's not over yet. Pink Friday, I mean, it's Black Friday. So far, it has been 400 orders per minute. 75% growth over previous year is great.
I'm still wondering who's buying so much makeup.
People are buying a lot of makeup.
No, a lot of people, and it's year on year. So the same time last year, a lot of people weren't going out. Now a lot of people are going out. So probably...
And they were still buying a lot of makeup back then. When there were COVID restrictions, people still went ahead and bought makeup. So
anyway, that's on Nykaa. And yes, those, the new age companies continue to be in focus on account of good news or bad. So Nykaa is up around 3.7%. Paytm also seeing a comeback today. But PTC India tells CNBC-TV18 that they hope to submit results of Q1 and Q2 in the next 7 to 10 days. Notably, PTC India has not declared Q1 or Q2 earnings this financial year. We also spoke to the company about the HPX stock. Listen in to what the management have to say.
We are ready as a PTC India Limited for the Q1, Q2 results are ready. But we would like to publish the results, the consolidated, which is the requirement of SEBI, and that will be done pretty soon. Our timeline can be another 7 to 10 days. I mean, that's what we have in our mind. But of course, we have to complete all the subsidiary companies also. They have to prepare their accounts, and then we can consolidate. We have submitted our recommendation, the board recommendation, to the regulator, but we are confident that everything will be settled as per the compliances. We are the promoter of that company, and whatever share you have mentioned, till date, we have maintained that in that company. And at this point of time, we are not participating as a trader in that company. So we are meeting all the compliances as far as the CRC is concerned. As far as the future of our shareholding and stakeholding in that company, we will be decided and will be shared at the appropriate time.
Okay, so that's the management of PTC India. We need to take a short break, but on the other side, Technicals, Prakash Gaba will be joining in. Stay tuned.
Welcome back. Absolutely flat for the frontline indices, behaving like a Friday afternoon, but we do have the mid-cap index doing extremely well. The Nifty Bank, some bit of profit taking after hitting a record high this morning. So let's talk about the Nifty Bank itself. Ekta, what's happening out there? I mean, it's consistently outperforming. Is it the fundamentals catching up, or? Well,
you know, these are just a bunch of statistics that have put together, considering that I used to do banking at one point in time. So it is always an interesting space to look at. Now, in terms of the year-to-date movements, when it comes to the entire Nifty Bank or a couple of the Nifty Bank constituents, you can see the likes of HDFC Bank, ICICI, all of them are either close to their fresh 52-week highs or at those levels. Look at the way something like a Bank of Baroda has rallied as well. It ties in terms of what's taking place with the PSU banking space. Well, to corroborate this, we have the price to book value, which is also expanded. If you look at it from the start of the year to the current prices on a price to book value, look at the likes of Kotak Mahindra Bank, even SBI, all of them have expanded. And remember that a couple of the private banks obviously lead, such as ICICI Bank as well as Kotak, in terms of the valuations. Now, a couple of triggers for the banking stocks: benign credit cost cycle, loan growth is strong, it's over 15% this year. Gross NPAs have improved to sub 5% on an average versus double-digit gross NPAs maybe in 2017-18. Net interest margins have seen an improvement on a Q-on-Q basis. And watch, however, going forward for sustainability of factors such as loan growth, net interest margins, deposit costs rising, and consumption eventually slowing and impacting retail loans as well. PSU banks, that's really been the toast of the market this year. So PSU banks, for example, their market cap has risen to a record 10 lakh crore for the first time ever. Margins have expanded. Valuations in the PSU banking space are still not very expensive. If you can see, most of them are still not even 1 times on an FY24 price to book value. So that's the upside that you can see if you just compare the earlier sheet with the PSU banks and where they stand. But most of them are at fresh 52-week highs. The additional piece of news is that the government has raised the maximum tenure of PSU banks, MD and CEO, from 5 years to 10 years. So that gives them some kind of longevity to execute their plans as well. And hence you can see a lot of interest within this entire space.
All right, take that point, Ekta. Thanks a lot for that. In fact, let's take that to Prakash Ghaba as well. Prakash, the Nifty Bank has been doing extremely well, was the first to hit a record high, in the earlier up move that we saw as well. Now again, sitting at a record high, a wee bit of profit taking, but that I believe would be par for course. How do you play the indices from here? Just below record highs for the Nifty and the Sensex. The mid caps are doing well. Would you be more stock specific, or would there be a trade in the index?
I would say Nifty and Bank Nifty both are at divergings.
Okay.
So some selling in the Bank Nifty, but Nifty looks okay. Relatively, Nifty is better to trade today on the long side. Have a stop below today's low on Nifty, somewhere close to 18,400, and possibly we'll see an up move around 18,500 or 550 zones. So there could be a trade on the long side on the Nifty, but not on the Bank Nifty. Bank Nifty looks a bit dicey. Best avoided. The other is for stock specific. I would look at stock specific and trade long on the side.
Okay, so what would those stock-specific bets be, Prakash?
I think two-wheelers is looking good. Hero Motors certainly is looking good to me, trading at 2694. I think it should go up. Have a stop below 2680 on Hero Motors, and possibly we'll see 2740, perhaps in a day or two for that. Second stock that I like is, I think RBL Bank is looking superbly good, trading at 151 zones, cross 150 with ease. Have a stop below 148 on RBL Bank. Possibly we'll see an upward around 155. Maybe take a day or two for that. So RBL Bank and Hero Motors are the two stocks that I would look at.
Okay, all right, Prakash, we're going to leave it on that note, and we wish you a good weekend as well. Time for a short break. On the other side, we'll put the focus on Axis Bank as well as Oberoi Realty. So the focus on banking stocks continues on the other side. Stay tuned. Welcome back. Well, for the markets, it's quite quiet. But remember that there's a lot which is happening globally at this point in time. Just to put it into perspective, one of the big global cues to watch out for is definitely what's taking place with China as well as the COVID-19 cases. So just a couple of statistics on that. The mainland China itself has reported more than 31,000 COVID-19 infections as on Wednesday. That is more than what the country had reported during the Shanghai lockdown in April, which was 29,317. There have been 6 COVID-19 related deaths which have been reported since the weekend as of Wednesday, mostly in Beijing. But the important point to also note is that nearly 90% of more of the total COVID-19 cases which have been reported in recent days have in fact been asymptomatic. So the asymptomatic cases are much more than what they were in April. So you need to put that into perspective when you're talking about the COVID-19 cases in China as well. Now, separately, another cue to watch out for is the central bank action. We've been talking about that. New Zealand, South Korea, and then we finally had Turkey, which has cut rates by 150 basis points. They've cut rates 4 times consecutively. But importantly, Turkey has now decided that the cycle of monetary policy easing has stopped, citing inflation concerns. Remember, inflation is a huge problem in Turkey, but nonetheless, it's another rate cut by Turkey, but it's the end of the easing cycle by the monetary policy there.
Okay, all right. So that is all about central banks being in focus. And we also have that data as far as COVID cases in China is concerned. So let's do one thing. Let's get in some important market opinion on all this, what's happening in the global economy. Let's listen into Christopher Woods of Jefferies, who spoke to CNBC Asia on the China COVID concerns and the Indian market as well.
So the base case is we are seeing clearly signals of gradual relaxation. But on the other hand, we're not seeing any evidence of a full-scale relaxation. The best signal of gradual relaxation is simply that the cases are surging and they're not imposing Shanghai-style lockdowns. But clearly, there's all kinds of restrictions on activity. So to me, we're going to be in a bumpy ride this quarter, next quarter. But the outlook for Chinese assets look better than it did a month ago. Up till now, the biggest winner from India, China plus one, has clearly been Vietnam. Vietnam's an old-style Asian FDI-led investment story. So that's the past. But I would say for the next 10 to 15 years, India has a very good potential chance to really take to exploit this whole trend, because India now finally has a coherent policy under these production-linked incentive schemes to attract foreign direct investment. So that's a big start. But what's been interesting about India this year is just how resilient it's been in the face of monetary tightening.
Axis Bank, that is the other stock which is in focus in today's trading session. This is on the back of positive management commentary coming in at the analyst meet that they had recently. Sonal, tell us more.
Well, yes, the stock has come off from the highs, but the commentary was quite positive. The focus was digital because the bank spoke about investment in digital platforms, which is giving them an opportunity of cross-selling. And with the Citi and Flipkart partnership that they are into, they will be among the top credit card platforms in the country, is the word coming in from this bank. They speak about their book, their operations as well, where they say delinquency levels remain below the peer private banking group, which is in the retail segment, and asset quality for them continues to show some improvement every quarter. If there are any macroeconomic headwinds, the bank says that they're prepared because they have sufficient and strong provision buffer in place as well. On the back of all this, Jefferies, which has a buy rating on the stock with a price of 1,110 rupees per share, says that the 40% valuation gap between this bank and ICICI Bank should narrow a bit, and capital raise is something they'll be watching out for, something that the company spoke about this time. UBS also has a buy rating. They talk about the fact that bank reiterated their medium-term loan growth of 5 to 6%, which is higher than the industry, and they also expect valuation gap with the peers to come down for the bank as return metrics will continue to sustain. JP Morgan has an overweight rating with a target price of 990 rupees per share. They speak about the tech investments. They say that they are in the last stage and now they will start showing in their books and they will start delivering operating jaws ahead. Glide path of cost to assets, that will be reducing by 25 basis points over the next 2 years, and bank's ability to maintain ROA, that is return on assets, at 1.8%, and credit cost normalization over the next 12 to 18 months is something JP Morgan is watching out for. So these are a couple of factors and couple of things that the bank spoke about at the analyst meet.
Okay, all right, Sonal, but we're not done with the entire rate-sensitive space. Oberoi Realty is another stock that you're watching.
Yes. So it is gaining in trade today because there's a clarification that has come in from the company. Now, remember, last week, we were discussing on the show itself that company spoke about an EGM which will be held on 1st December to purchase one or more residential premises in 360 West, which is a flagship product or flagship project for the company. And they spoke about it, but there was no clarification as to how they will fund this acquisition. Will it lead to higher debt? And now the company has gone ahead and clarified. They speak about their 32.5% profit share in this project. And they say they have a pending receivable of 1,200 to 1,500 crore rupees from their subsidiary which oversees this particular project. The company will pay 4,000 crore rupees as an acquisition cost over tranches in next 12 months. However, it will be a cash neutral transaction because they will be able to take up all the receivables from the subsidiary or from this project from the 32.5% stake. And they will continue to be the main seller of the unsold units of 360 West projects. The stamp duty that they're paying of 6%, this will be recovered once they actually make sale of the projects under this particular project. ICICI Securities says that company is continuing to retain control over the entire sales of the project, so that is a positive. Company's guidance of proposed transaction will be cash neutral. So that gives a big relief to investors because that will not lead to an increase in company's debt. So that's why some relief rally is what we are seeing in Oberoi Realty today.
All right, that's about Oberoi Realty. But let's talk about something fun. It is Friday and it is important as well because CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective. It's presented by HSBC. But before the official launch, we were joined by some young future leaders who shared their vision with our managing editor, Shireen Bhan. Their dreams and superpowers transcend age boundaries, from loving the Hulk to saving the planet to wanting the stock markets to open late so that their father can drop them to the school bus. A heartwarming conversation. This is a must-watch, actually. Go ahead, watch it.
Asha, do you sing?
No, I just listen.
You just listen also? Anybody here who sings?
I sometimes sing.
You sometimes sing. Can you sing us a song?
Don't like to sing in like the public. I'm like a little scared. But I sing to I just sing to myself. I don't sing out loud.
Okay, so you're singing in your mind. What song are you singing in your mind?
I'm singing the song 1,000 Years. It's a good song. It's by Christina Perry.
It's a very good song. We would like it if you could sing just one line for all of us, if possible.
No.
I like that. Very firm, very clear. No means no. We respect that. Yes.
She gets it.
She gets what?
She gets the fact we sing to ourselves, not others.
Yeah, we're not performing monkeys. I totally get that, which is why we're not forcing you. So we appreciate the fact that you are very clear about what you want and don't want to do. So let me end by asking each one of you before we let you go. Are you willing to? She wants to sing. What will you sing? What are you going to sing? Tara, sing.
See, Shanti, you said you're going to sing? I will.
Okay, sing. Please sing.
There once was one ship that put to sea. The name of the ship was one way of the winds blew up.
Her boat dipped
She's kicking my shoes.
Welcome back. Still tuned into Halftime Report on CNBC-TV18. Well, good going for the mid-cap index. The other parts of the market are consolidating at current levels, but some recovery is just underway for the Nifty as well, down just 6 points as we speak. But let's move on and talk about the Finance Ministry that recently set up a committee under former SEBI Chairman M. Damodaran to look at ways to scale up PE VC investments in India. This also comes at a time when we are seeing large-scale layoffs across startups in the country. Speaking to CNBC-TV18 exclusively at the launch of industry body FICCI's Model Risk Code, former SEBI chairperson M. Damodaran spoke about ways to scale up PE and VC investments into India, lessons from layoffs in startups, and regulatory changes needed for ease of doing business as well. Listen in.
I think the Model Risk Code is relevant for everyone who's doing business, because it is size neutral. Risk is a size neutral problem. Everyone has risks. And if you recognize that early enough and put in place steps to address it, the company will be better off, the individuals will be better off. So it's relevant for everyone, whether it's a startup or a 100-year-old company, equally relevant.
Right. Just to also ask you about the need for greater parity, greater rationality when it comes to taxation or domestic capital. This has been a demand of many PE, VC investors from startups as well. How do you see this?
Well, we have received as a committee representations from 4 sets of people. They made presentations to us. This has been one of their asks. As to what my thoughts are, I will hold them back for another month or so till we have the report out, because we are in this discussion stage. We've got inputs from a large number of people. The committee itself has considerable expertise drawn from various sources. And we're looking at all of this. Our objective is to see how to make life a little easier for people that are actually investing in India. Therefore, I don't want to get into the specifics, but this is certainly one of the asks that the committee has received and is addressing.
By when do you think you'll be able to be ready with your report?
Our target date is the 9th of December. We are hoping we will make it by that time. We have had several rounds of discussions among the committee members, and now we are just putting it all together in terms of what we can recommend, what we cannot recommend, because everyone has given us long lists of demands, saying that India would be a much better investment destination if all of this was done. At the same time, there are some regulations that are in place for a certain reason, and it's not without reason that regulations or laws got written. So we have to see whether that rationale still holds. Even if that holds, is there a slightly lighter touch way to do it rather than keep it in its existing form? So these are the possibilities that we're addressing.
Right. Looking at ease of doing business, this has been a big priority for this government. If we were to ask you about 2 measures that the government can take to make it easier for companies to invest in the startup ecosystem, make the investment climate more friendly, make India a more receptive place for investments, what could that be?
No, I think certainly you got to look at all the existing regulations and laws and see whether there are any among them that are past their sell-by date, have lost relevance, because you write laws and regulations in a context. Has the context changed? And Of course, at the back of all of this, we got to keep in mind the fact that India needs to see a lot of investment coming from outside of India. So how are you going to make it a little easier? That's exactly what we are addressing.
Okay, that's the CNBC-TV18 exclusive. Just a quick word on the markets. A lot of broader market stocks buzzing at this point. Just keep your eye out on a couple of stocks, even which are not directly financials. The NBFC space, for example, LIC Housing Finance is gaining around 3% and something like an RBL Bank, which is obviously a bank, is up around 6% at this point in time. So a lot of traction within that space, but even something like a CAT, BHEL, all of these stocks buzzing around on the upside. Time for a break now. On the other side, commodities. Manisha Gupta, commodities editor, will be with us. Stay tuned.
Welcome back to Halftime Report. Joining us on the show now is Mr. N.S. Ramaswamy from Ventura Securities, and we'll talk about metals, where we are headed for a weekly gain for this one. Mr. Ramaswamy, hi. Let's start with the precious metals first, because when you look at this week, gold is up 0.5% and silver clearly outperforming with 2.5% of gains. The decline in US dollar clearly is one theme which seems to be really joining across. How are you looking at precious metals as a space, and what price views or forward-looking ranges are you looking at?
Gold, Manisha, we'll be looking for a mild bullish view. We are intact with that view on gold, especially. Quoting at around 1758 range on the COMEX levels. The contract of the December had made a high of 1777 or close to 53,200 in the MCX counter. So from 52,600 range, we are expecting a jump of around $20, which translates into around 600 rupees on the INR front. Basically, it was a subdued market volatility previous day because of no economic data. Thanksgiving holiday was there. But the dollar bearishness is actually giving a great advantage to gold, and it should advance beyond 1777 to levels of 1786 or 1800, 1830, those levels. The further rally is expected only if you see a great dollar index breaking the 104.50 support level, which is seemingly possible because of the confidence in the basket of currencies as against the USD, whether it is euro, pound or franc, which is showing some confidence. So dollar is weakening. And also the bond yield, if it were to break those support levels of 3.5, currently the 10-year bond is around close to 3.66. So it's basically a perfect orchestra between happening to gold versus dollar and bond yield.
Fair point. While buying in gold is what you're recommending, would you say the same for silver? Because we've seen an outperformance not just for this week, but for this month until now for silver at $21 per ounce. Where are your next targets for this one? I
would be on a cautious bullish approach as regards silver, because it has got the pressure building up on the industrial metal fundamentals, which is impacting. So although on the bullion pack, gold is a buy, but silver is a cautious bullish view. So from levels of the December quoting at around 61,700, it would be meaningful to track the March counter, which is 63,100. So on the COMEX front, 21.44 we should inch back to close to 23.50 we are expecting. On the short-term basis, 63,100 should be close to around 66,000 levels. So we are cautiously bullish on that. First, a high has to be made 64,500 for the March contract. Once it breaks that, that path should rise.
Clearly. For the base metal prices also, the weakness in US dollar has been supportive. Clearly, the kind of economic data that we've seen from China or European Union is not so supportive. But the fact that China is announcing stimulus, especially in the real estate, infrastructure projects, etc., do you see that as a supportive factor?
I see that as a supportive factor, but the way the domestic demand hasn't picked up in China, although they talk about this increased COVID case, 31,000, but actually those are all media reports, which is talking of only asymptomatic is around 27,000. So it is that bullishness is intact little bit, but this the news has to unfold a bit. So the current short-term view on copper on the industrial metal, base metal side is a bit of bearishness. It can come down, a profit booking should happen. It should come back to those levels of close to 600-700 or and odd in LME, and maybe 630-640 levels in the MCX counter.
All right.
Okay, Mr. Ramaswamy, Manisha, thank you so much for joining us and taking us through those trades or the outlook as far as precious metals are concerned. That's all about commodities. For the markets, we've seen a sharper recovery. So, of course, we'll continue that conversation. And it's a wrap on this edition of Halftime Report. Business Lunch will take all the action ahead. Stay tuned.